Oh, well, ladies and gentlemen, what do you want me to say to you? Everything's looking great for cryptocurrency. You've got posts everywhere talking about, oh, Bitcoin this, they're buying that. It's so excitable. Greed is at its best. Let's break it all down first. Let's try and justify it. Let's back it up with a little bit of information before we can start popping the cigars and getting the champagnes out. In today's video, I'm just going to break it all down for you, give you an overview of what's going on so that you're not going in blindly thinking that just because some dudes are blastering it all over on X and that optimism is high, we just got to make sure that we have some form of responsibility, because at the end of the day, it's your money that you're putting down. Welcome to Traders Reality, guys. Let's break it all down. So, in front of you, what is this chart? Well, this is the financial stress index versus the S&P 500. And quite simply, when the financial stress index shows you a reading above zero, we've got a little bit of a problem. When it goes below zero, things are looking kind of good, as you can see. When the blue line spikes above zero, we've got ourselves financial stress. Equally, the stock market takes a nosedive to the downside. When that starts to drop down, the market starts to recover. So we're coming out of financial stress. And you can see that it's been trending lower for quite some time. That's why the Federal Reserve isn't worried too much about cutting the interest rates. I mean, expectations are still there. We're going to be getting the rate cuts. And of course, Fed pivot. I'm just saying, Fed pivot historically leads to corrections. So going back into this chart, ladies and gentlemen, this chart will give us the idea as to why the bull market is sustaining itself from a financial point of view. In other words, companies, businesses, how much margin are they using? It's clear as day that we are in a good position. Current financial stress index is reading minus 2.14. And the lower that keeps on going, the higher the stock market will keep on moving. Updating you here with the smart money, dumb money chart. When the blue line starts to turn down, it gives us the idea that smart money investors are actively selling stock. Can we back that up? Of course we can. Going over into the NASDAQ itself, you can see that we've got this move to the upside. Another record has been set from yesterday. Volume came in a little bit lower, but it managed to recover from the previous day's sell-off. But the great thing is price action has shown that it's just cleared out the previous ranges, and it is in price discovery. Backing the story of smart money selling right now, you can see that retail is putting on risk. As you can see on the bottom right over here, that we've got this curvature coming in on the risk on-off indicator. So if it starts to climb up, it tells us that investors are actively taking on risk in the stock market. Well, what's this? Well, this is an optimism chart. And it just gives you the list of stocks where everyone would be coming across as optimistic. That's on the 0 days moving average. Go to the 3-day moving average. Yeah, we can still see there's still a lot more optimism right now. We got Cisco up there with their earnings coming out very soon. So just quickly go over to that. You can see they're going to be declaring their earnings at the close of today. And given with all the hype that's going on with the AI marketplace, I can appreciate that Cisco's probably going to be doing relatively well. But let's just go back into this chart over here. Now, this shows you over the last 3 days, the moving averages are suggesting that people are somewhat optimistic in these stocks. Go to the 5-day chart, and then we can see it's starting to go over here now. Palantir, Apple, okay, Avgo, and then you've got Nvidia. Where's Nvidia in all of this? Okay, you can't see Nvidia right now. There's a little, there you go, Nvidia all the way down there. Hold on a second, Tino. This is the 10-day chart. This is the 20-day chart. This is the 50-day chart. As we go further and further into moving averages, or the last 50 days, it's clear as day that we have not yet hit the point of extreme optimism. This is backing the idea as to why the stock market may still have more room to continue to the upside. Okay, now, it seems like everything's really good, but let's just dive into what's going on from a money perspective. In front of you are the total receipts generated by the US and the total outlays. Well, you can see that we're spending a little bit more than what we are earning. And tariffs, of course, are generating and fueling lots of liquidity coming into the US. Hold on a second. Tariffs are making money for the US, but is it sustainable? In front of you is a chart that shows you the public debt the federal deficit versus gold's price. Over here, it gives you a nice little number. And that 120.87% says that for every dollar that the US earns, it owes 120% on top of that. Well, that pretty much explains why gold's price is making a move to the upside, because they're just consuming so much debt. But hold on. Did we not say that we haven't got any financial stress going off? Isn't everything all good right now? Stock markets are pumping at their all-time highs. Just quickly go and dive into the stock market. NASDAQ currently trading very well towards that 23,989, nearly missing that 24K region. Look at that, tapped it and then pulled away. It's all great, isn't it? But fundamentally, how is it sustainable? People's perceived value. That's how it's sustainable. The idea that the stock market is getting optimism fueled by the idea of easing interest rates, that means money's going to be coming into the stock market. That's happy days. I mean, you can just go and have a look at the articles. The treasuries rose across the curve with the 10-year falling 3 basis points. Now, just going over into the 10-year yields, you can see 2-year yield is getting smacked to the downside. The 5-year getting smacked to the downside. 30-year smacked. 10-year smacked. What does that tell you? Well, let's just look at this chart for a minute. Current interest rates right now are at 4.5%. So, are investors' expectations of interest rates in the future lower? Of course they are. The 10-year is currently trading at 4.254%. That tells me that investors are actively going into the bonds to lock in yields because the expectation of interest rates is going to get cut. That means yield on the dollar is naturally going to come down. That naturally means that yield on the euro will be sought for because it's lower on the US dollar, which is why it's so important that we understand what kind of rate cut we're going to get. The bigger the rate cut, the faster investors are going to move into assets that will appreciate against the US dollar. So if you're not going to be using dollars, what you're going to be getting? Well, the ETF, its balance is going up. 743,608 is where we are with the IBIT Bitcoin Shares Trust. And we got some nice price projections. $25,000 for Ethereum by 2028. Good old Standard has come out with a good old price projection. Going over into Ethereum, you can see it's doing very well and so close towards its all-time high. That is wonderful news right there. Going over into Bitcoin, you can see that Bitcoin's doing a fantastic job of making a nice little W formation, rise, retrace, continuation to the upside. I took a trade on this logic right here. I'm currently in risk, as you can see. Currently got $2,600 worth of profit in Bitcoin, and we got around $3,784 worth of profit on Ethereum. And of course, we're around $6,400 gain for the day. But we're going to wait and see how this one plays out. Naturally, when I'm taking trades, I don't really like to leave risk on for too long periods of time. Why? Because crypto can do absolutely anything. And this trade that I shared with Ethereum and Bitcoin was shared this morning to the Platinum members on the post from this morning. And we're anticipating and trading the idea that the market is in that excitable mode. It's in offering mode. It's in greed. Everyone wants to buy crypto right now. Equally, to back that logic up, you've got the offers. You can see that we've got quite a significant amount of offers coming into Ethereum to the upside. You've got some nice offers up here. We're around, about 720,000, but I'm looking for much bigger orders. Like we've got a couple of million. There was quite a few orders sold this morning earlier on the spike to the upside. It was about, $50 million worth of Ethereum sold at 4,700. Equally, we've got the same behavior going in with Bitcoin. And what you can see with Ethereum, you've got these liquidation points right here, which will be tapping into traders who are using a relatively decent amount of margin. And you've also got these guys here that are using less margin, high leverage. They're going to be the ones that experience the stop runs and get shorted out and liquidated. But this is where the money's at. It's all at the all-time high in the sense where these are the high margins, and that's where the market is naturally going to gravitate towards. Equally with Bitcoin showing a nice recovery. If it can get above the 122,500 region, we are laughing because up there is where liquidity does transact. You can see there you've got some offers at 17.57 million when the initial order was for 2.92, which means that if it does go above 122,000, that logic tells me that the same participants that had sold before had been buying Bitcoin on bid, and now they're looking equally to offer it out and sell it at higher prices. And looking at the order flow, you can see we're starting to see some interest coming in, but I would ideally prefer to start seeing more offers the same way we've got it over here for Ethereum. I want to see that happening for Bitcoin. But the good thing is this: if there is not that many offers coming in, equally you've got more bids coming in at retraces, it means that there is a demand to hold on to Bitcoin for longer periods of time rather than taking a profit sooner. That is equally going to start sending Bitcoin's price higher. And that's something you've got to take into consideration. Rolling over into the price action, you can see it's doing very well inside of this range, and it's doing a nice test of the 50 EMA. But for the holders, we're looking at price action. You can see it's coming back into the recovery of the vector candle wick right there. And of course, if Bitcoin can make claim towards the upside and clear out its all-time high, that's going to be a win-win for guys in cryptocurrency. And just quickly going over into the stock market, in my opinion, the stock market is going to be fueling that move to the upside. So now we're clearing that 24,000. If the stock market can come to the day and it maintains the same behavior as it did yesterday, then today's going to be a good day. But remember, Donald Trump is talking today. He's going to be talking at 4:15 UK time. So that is, of course, a couple of hours after the open. So we might have ourselves a little bit of volatility with everything across the board, depending on what he's going to be talking about. As usual, ladies and gentlemen, make sure you do like and subscribe and check out the Traders Reality website for more information on the hybrid system. Now, just before we go, we're just quickly going into the market open itself because that's when you're going to be getting this video. Bitcoin doesn't have any news announcements to be worried about other than Donald Trump speaking. But just remember, guys, if you've got yourselves good spot positions, as long as Bitcoin is still trading above the 5 and 13 EMA on the daily time frame, absorbing these wick movements up and down, the progressive move is to the upside. Yes, dominance of Bitcoin has been taking a little bit of a tumble to the downside. Equally, that's going to be fueling Ethereum's move to the upside. Just make sure that you're taking money off the tables and get rid of this nut job XRP, even though it is going to break out very, very soon. We're going to get the nice movement up against that $3.51. It's going to tap $3.80. Then it's just going to come crashing back down and go into the XRP formation. Those who know. With that being said, guys, hit the like button on the way out. Subscribe if you want to see more flavor like this, and I'll be tuning into you all later. Peace.